Hello and welcome back to Weekly Market Recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. This past week, we saw a wild week in the market. We ended up down 3.31%, which brings us down 1.12% year to date. And really, the main market movers comes down to Jerome Powell and the Fed and what they said, outlining where we currently are in the economy, and also what's happening with GameStop. We can't avoid talking about it. It's what I'm going to call the big long, the opposite of the big short. Everyone's going long on it. So what happened? And before I can really describe the whole piece of it, I have to talk about what is a short. And so what a short is now imagine that you want to go against a stock. So if you wanted to go long on the stock, you would just buy it. But if you want to go short on a stock, what you do is you immediately borrow the stock and sell it to another person. So let's say Rich is an institution and he has the stock of, let's say, GameStop at $10. I'm going to borrow it from Rich at $10, sell it to someone else, and then my hope is that the stock all of a sudden drops and goes down to $1. And then what do? I buy it back at $1. I replace it back for Rich, and it's all good. I've made $9 and it's great. Now, what happens when the opposite happens? So I've borrowed the stock, I sold it for $10, and now all of a sudden the stock price starts to go up $20. Well, now what do? I still have to buy back that stock at some point and to close that position to give it back to Rich. So I buy the stock back, let's say at $20, and instead of gaining $9, I've lost 10. Now, that's one piece of it, but what happens when all of a sudden I'm not the only person going short, but now we have hundreds, thousands of people or really large institutions going short on a stock? It is possible to have over 100% of the shares of one company short. And that's what happened with GameStop. So we didn't have just 100% of the outstanding shares short. We had 130% of the shares short. So what happened? This group on Reddit called Wall Street Bets back in July of last year saw this and said, wait a minute, that doesn't really make a lot of sense, because if you have over 100% of the shares sold short, if we start buying and going long, the price is going to go up, and it's going to go up really rapidly. And if we keep going longer and longer and buying up all these shares, eventually these institutions are going to have to cover their short positions. And when we do that, it's going to cause a short squeeze, and we're just going to see the price of GameStop go to the moon. It's just going to keep on going up. And in short, that is what we saw this week. We saw the buying power of retail investors go long on this stock, and then also followed by billionaire investors. Others jumped in to the point where GameStop currently is over $300 a share, and it started last week. It was in the mid 20s. So how does this affect the rest of the market is probably a great question. And with these hedge funds having to cover their positions, Rich, what does that mean?
Well, what it means is that the hedge funds now are going out and selling their Microsoft, their Tesla, their Apple shares to get the cash in order to and to take gains in order to come up with the cash to buy the GameStop shares that they shorted at 25 or some price like that, and now is in the 300s.
Exactly. So that's one reason why we've seen this sell off of the rest of the market, because there's kind of two reasons. One, as everyone's talking about GameStop, everyone's talking about AMC, everyone's talking about Bed Bath & Beyond and all these other ones, costs. They're trying to run into these investments. One, people are getting out of other investments. So the retail investors who are jumping in, they're selling their other stocks to get into this. And the institutional investors, they're selling their best winners over the past year to cover this new short and one of their worst losers. So they're offsetting winners and losers, which overall has seen a sell-off from the rest of the market. So that's a really short-term piece. It will be curious to see how long this lasts for. And I know what probably a lot of you are thinking, what's going to happen with GameStop. To be honest, Rich, I don't really know your thoughts, but I wouldn't touch this with a 10-foot pole. My belief is that there's going to be a lot of pain and a lot of people getting in at the wrong time and really left holding the bag at the end while everyone else is trying to rush out. But one thing I will say is that once we do get through this, I think we'll probably see the rest of the market start to normalize a little bit more. Rich,
Absolutely.
on it.
I agree with all those sentiments. And what I've seen is when this has happened before, and we saw a few short squeezes on this magnitude back in the dot-com era, those stocks in a day or two drop back down, and it could go down to $1 a share from 300. It happened a few times. It doesn't happen much, but once every 20 years or so, where you have this confluence of events that cause a few stocks to just have meteoric rises and then crash to the earth.
And the other big piece of it that I don't think we have, the infinite amount of time to really get into and talk about, but is important. It's going to be amazing to see how the SEC goes about this and what it views as market manipulation. There's a lot of people who say it is market manipulation for these hedge funds and institutions to short a stock over 100%. I think that there's likely actually a good case for that being true. There's also a case for, these forum Wall Street bets investors only getting into the stock to cause this short squeeze, to get into a stock to pump up the price to make it, which also could be deemed as market manipulation. And then to add just more drama, we also have Robinhood and other brokerage platforms restricting buys on these risky stocks on Thursday, which also could be viewed as market manipulation. So you have three different areas talking about market manipulation, but you want to talk about something crazy, Donald Trump Jr. and AOC on the same side for the first time, and I might be ever, Donald Trump Jr. and AOC on the same side saying, how on earth could Robinhood stop people from buying stocks, limit the market in such a way?
And of course, the reason why they did it is they didn't want to take big losses because their platform couldn't keep up. And in addition, there's a regulation by the SEC that holds brokerage firms liable if they contribute to a big run up like this in stocks and then it crashes. So they're looking at on either end that they're not making enough money to be in this game. And then, of course, they got a lot of pushback and complaints to the SEC when they did this and then back down. So it'll be very interesting to see how this plays out.
So even if you love what's going on, even that alone, just not knowing what the regulations are going to be and how the SEC is going to get involved with this whole nightmare, I would never look at this as a realistic investment at all for the long term or even the short term at this point. But
absolutely,
I think we've talked about it enough. If you have more questions, please reach out. We're still in the middle of this, and who knows, it might last another week. It might last, a day. It might last another month. Who knows how it can be dragged out.
Absolutely.
But the next big thing that we did see during the week was the FOMC met, on earlier, and Jerome Powell released some of his guidance for what he thought for the rest of the year. And really, everyone knew that they were going to keep interest rates at zero. That was no surprise. But one of the bigger surprises was actually the more negative view that Jerome Powell has on how impactful the virus currently is, and maybe not as much confidence that we're going to get a handle of it.
Yes, and I think part of it is that the virus is mutating, and there are cases of the South African variant in the United States, the UK variant, and now there's a Brazilian variant that's working its way through our country. So from his standpoint, I can understand why he said that. And also, as you would imagine, any discussion of the virus getting worse causes the stock market to drop
Yeah,
because it's the economy. Yes.
you have those two pieces put together, and it does lead to, unfortunately, one of the worst weeks in the markets that we've had since October. So it's been a very long time. We haven't seen a 3% drop over a week, which is so makes sense why at least we saw that sell off.
Absolutely. And as always, we're watching this very carefully and protecting your portfolios as much as we can. We don't think that this is a time to make any real changes.
Yeah, as for even in the next couple weeks, we'll likely see the once these short positions, game stocks, as Elon Musk said, once these all come back to normal ranges and this whole escapade is over, I think we'll probably see the rest of the market recover to normal levels and then likely continue on from there. By the way, thank you guys so much for tuning in this week. We appreciate you as always. We're here to support you. Your money's here to support you. And we'll see you again next week.